Hello everybody, welcome to Talk About Houses. I'm Todd.
I'm Oana.
We're going to do a market update today for the month of February. We're actually going to put this out like a day before the month because it's over the weekend and the month January is basically over. There'll be no more closings in January. Okay, so we're going to start off with the market action index and the real-time market profile. Okay, so you see this, we have this thing, we put this on every month and the number is 65. Okay, now what's cool is later on we're going to show you the trend of this and you're going to be blown away by this. So the market action index 65, it's a seller's market. Last month it was like 63 or something. Mm-hmm. Over on the right you can see a bunch of stats. We're going to go over those in detail. But the market hasn't really changed much in the last few months, right? It's been this pretty 65-ish strong seller's market. Sellers market.
Yes.
Okay. All right. So we're going to get the first data, list price, median list price. If you look at this chart, you can see now it looks like prices have quadrupled. They haven't. That bottom line is 300,000. It's not actually zero. So, but you can see that list prices are steadily increasing. And when you look at this, you can see that there's still an upward trend in list prices. Now, what's interesting is this is January. And what tends to happen, Oana, in the spring?
Well, spring is selling time. Spring starts on S, selling starts on S. That's what happens in the spring. So in the spring, we tend to get a lot more inventory. There's a lot more movement. A lot of that is just people's situations. Holidays are over. They're getting their tax refund, or maybe they're looking at how much they paid in taxes and thinking that maybe Uncle Sam should underwrite their home ownership through a home interest tax deduction. Whatever their situation is. Plus, kids are winding down. The end of the school year is coming up, so people are getting ready to relocate in time for the new school year.
Okay, all right, perfect. Median days on the market. So 40 is the median. Mm-hmm. Now, this is actually increased. If you look at what it was last summer, it was 20. It's double. And you might think, oh my gosh, the market's totally cooling, but 40 is still historically very low. Mm-hmm. And remember, this is a median. Mm-hmm. So there are some houses that have been on the market for a long time. They're overpriced. They're whatever, not desirable. This is actually pretty healthy that the market's sort of, I'm not too worried about this. If this gets past like 90, you can see if you go back to, it was 80 in February of 2020. That was before COVID. Mm-hmm. So unless it gets back to 80, which is double, I'm not too worried about it. It's still a healthy market.
Right, even at 80, that's still a healthy market. And to Todd's point, I mean, I've seen homes on the market that, I've seen listings. This is one particular listing that I looked at and I just laughed. This particular listing, it was listed for $1 million. And they put on there that they wanted to stay rent-free for a year. Now, you're thinking, well, okay, that could work, except that nothing in the neighborhood had sold at like over 800,000. So
they're wasting people's time.
So this is part of the reason why we're seeing that homes are on the market a little bit longer, because there are people out there who are fishing. Okay,
here's a really, really important one that we use to determine if the market is if it's bubble or it's going to crash. Inventory. If you look at this, you can see the inventory at the peak was about 6,000 houses a couple years ago. Now we got 2,000, and that trend is declining. Mm-hmm. 2,000 houses on the market. Unheard of. The last time it was this low was last summer, and it's probably going to just go back down to that 1,500. If you look at this, there's two numbers on here, 90-day average and 7-day average. 7-day average, this thing is down to 1,500, about 1,500 or 1,600. Right. Is that crazy?
It is. So when you consider our population, this is nothing. So it's very tough out there. To give you perspective, I have people who call me all the time and say, hey, do you know of anything that's going to be coming on the market? So, I mean, they're just desperate to find something. And I have buyers who I've been working with, and we ended up buying a house before it was ever listed, meaning I had a purchase agreement before I had a listing agreement.
Yeah. Inventory has to really get above 8,000 to 9,000 before I even worry about it. Mm-hmm. About being, especially in this market. Remember, we have 400,000 homes here, and we have 2,000, 1,500 on the market. That's nothing. It's like no houses are not being sold. So until that number starts to rise substantially, there's no chance of a bubble. There's no chance of, the market can level off, but it's not going to implode. And just because prices are going up doesn't mean, this is not the stock market, this is not cryptocurrency, okay? The inventory, we have to look at this. So we track this every month. The next one is price per square foot. Now, once again, the baseline here is $160 a foot. You can see right now $240. You can see basically last year it sort of took off and started increasing nicely. The average 7-day trend is higher than the 90-day average. So that and again shows us that this trend of list prices increasing is something that's going to continue probably throughout the whole year, right?
Right.
Okay. Now this is really fun. This is market segment. Now this is where we take the real estate market, break it into 4 quarters. And it's based on value. The top quarter of the market, we'll call that luxury. The second quarter of the market, everything in the top and second quarter is the top half. And then the bottom 2 halves of the market. This is what's interesting. If you look at the top quarter of the market, 1.3 million, that's the median for that. That means 1/8 of the houses sold for 1.3 million or more. That's unheard of. This is not San Diego. This is Las Vegas. We actually have a luxury market now.
We do. We have actually a substantial luxury market. And what's interesting is that we not only have a luxury market as far as purchases, we have a luxury market as far as rentals as well.
The other thing I think is very interesting, the bottom quarter, the median in that bottom quarter is 359. That is higher than it was the last time the market took off in 2005 when it got up to 315 median price. That was the median. This is the median of the bottom quarter. And I can tell you that anything under 350 sells. It literally sells.
Yeah.
Okay, now this is the fun one that I told you in the beginning I was going to show you. Now we have this market action index, and when you look at this tells you, if you go back and look at the very beginning, February 2019, the market actually was like between 30 and 40. That's a normal market. And it went all the way till February, and then it started climbing, got into the 50s, then 60, and then boom, shot up to 90. And it slowly made its way back down to like 60, and now it's climbing again. And you can see that little dotted line is the 7-day average. It's more volatile because the 90 is looking at a longer period of time. But the 7-day average market index is like 70 something. So that shows that the seller's market, that's a leading indicator that the seller's market is going to be strong, that there's going to be more multiple offers, home prices continue to go up. Our predictions were like, did we predict 12 to 15% kind of at the beginning of the year?
Yes, we did.
We are probably going to be wrong because we're probably going to be on the low side. It's looking that way.
We'll see.
Yeah,
I think we're going to have significant appreciation this year. I think the only thing that's going to temper it is some unknown event. I don't think that the rise in interest rates is going to have a significant impact.
Nope.
I think people are still looking to put their money in real estate as the economy continues to be unpredictable.
Yeah, I agree. It used to be that the real estate heavily weighed on the real estate market. The interest rates heavily weighed on the real estate market because it affected the main source of people buying. But that's not the case today. You do have people getting loans, but look, even if interest rates go up, I think with the video we did with Mark Baker, he said he thought they would go up to like 4.75 at the most. That's ridiculously low historically.
Right.
That's if you looked over the last 20 years or more, that's still within 1% of the bottom, the lowest they've been.
Right. I was looking at a little article that was published at the end of 2021, and they were talking about rent prices having gone up in Las Vegas 27%. So your mortgage payment won't go up 27% if interest rates rise a little bit. but your rent payment, again, it's unpredictable. The rent payments have gone up significantly, and people who have considered purchasing are really getting very serious about it. And like I said, springtime is a big time for people to purchase because of the tax refunds, because of a lot of different things. And I think we're going to see an increased demand by buyers.
10 years ago, a median rent was $1,100. According to this today, it's $2,174. So almost 22. It's basically doubled.
Yeah.
Rents have doubled in the last 10 years. Now, home prices have doubled plus in the last 10 years. So rents have just followed. Agree with Oana that it's not going to, interest rates are not going to have a substantial effect like they did in the past. There's too many people with a ton of money, with a hedge fund, corporate buyer, Wall Street, people coming in, cash, buying houses they've never seen to rent them out. And then, so anyway, what else? Do you have any final thoughts for the market update for this month?
With a variety of buyers, with interest rates still at record lows, with people wanting more stability in their lives, wanting more space, wanting more control over their lives and over their home situation, I think home buyers will continue to put pressure on the market and seek homes to purchase, which will continue to drive home prices up. Yeah,
I think so. Remember, this is just based on data. This is not financial advice. This is opinion. But we've shown you all the data and given you anecdotes and everything that sort of support it. But I think it's going to be a strong year. We're going to do another update every month. Just subscribe, hit the notification bell. Leave us a comment. Our information is below if you need to sell a house in Las Vegas. If you need to sell a house or buy a house anywhere in the U.S., you can reach out to us. We have this resource called Referral Cloud where we can help you get a great agent in whatever market for selling or buying your house.
Absolutely.
All right.
So hit the notification bell, like the video, share the video, and we'll see you on the next video. Bye.
Bye.